Anyway, I apologize for the difficulty there. Linda, Sam, I do appreciate the introduction. As Linda had noted, I am one component of our overall group of companies within the overall Heffernan group, which we'll dive into a little more as we look into a little more personal introduction. But before we do that, I did want to start off just with a brief overview agenda, what we'll be looking at today, and kind of covering the various content that we'll be running through. So with a little more personal introduction to follow, after that, we're going to take a deeper dive into what the cyber risk landscape looks like. And more specifically, we want to take a look at that from a macro sense and a micro sense, specific to home care. After that, we do have some best practices and self-awareness questions and evaluations that we do recommend for any potential insured looking at cyber insurance policies or just evaluating their overall cyber risk as a whole, and then as well as future strategies, and ultimately, finally, where an insurance policy on the cyber side can play into your overall cyber risk endeavors. So with that, we'll dive on in. Heffernan Group, as Linda noted, is a large national brokerage shop with various entities. We have a lot of different teams dedicated to various services for end clients, as you'll see here, from coverage specialists, specific program development, complex claims support, and training, et cetera, like the one we're doing today. So with that, a little more personal look at who is speaking today. This is yours truly. As Linda noted, I am Senior Vice President at Socius, co-professional liability practice leader, and was actually fortunate enough to be named the top cyber specialist broker in 2017. With that, we don't need to spend too much time on me, so we'll dive into the actual content itself. And as mentioned before, a perfect starting point to evaluate cyber risk as a whole is to really look at the macro sense to it all. And what we see from our perspective in the reports that are being generated from the cybersecurity firms is that things are trending in a much more concerning fashion. And there was a recent report released by Net Diligence to paint this very clear picture of what they anticipate based on past experiences over the past 5 to 10 years and what they're projecting for the next 3 to 5. A couple things that they noted in their report as they're assessing the various claims and losses that are being reported to various governmental bodies and covered in the media is that they anticipate cybercrime damage to hit at least $1 trillion in total by 2021, which is a pretty alarming rate, given that it's that total figure would be the greatest transfer of wealth in human history over that short time period. So needless to say, this is the focal point for malicious third parties, but it's also a big concern for businesses just operating in a very technologically advanced society, and that you could make error without a third-party threat, and it ultimately leads to a loss. Also, to put that into perspective, that would be more profitable from a $6 trillion figure sense than the combined illegal drug trade. So it's big business for the malicious actors out there, and it's costly for the businesses just operating in the technological advances that we are. Taking that a step further, that report from Net Diligence also reported that human attacks would be directed, or I should say hacking attacks would be directed at humans more so than ever before, because that's the greatest vulnerability access for any business. So what that reports and ultimately describes is that you could have the best technological advances in place from a security and privacy standpoint, but at day's end, one of your biggest weaknesses, at least from the hacking side and their viewpoint, is the actual users and the human factor. So the common phrase being told is that they're no longer looking at the silicon aspect of it, they're looking at the blood aspect, the human aspect. So with additional devices being rolled out in the millions on a daily basis and greater population expanse emerging into such technologies and utilizing such technologies, they predict that it's going to be even greater as we continue forward. Finally, they did note, and this is specific to the healthcare industry, of which home care is classified or falls into, and I think is a bit more relevant for today's conversation, is that in this report, they noted that healthcare was actually the #1 targeted industry for ransomware attacks. And in 2016 and 2017, ransomware attacks were the fastest growing type of attacks. Now, I'll be happy to dive into what ransomware fully entails for those that don't know, but it's pretty alarming, and the statistics they show is that an actual ransomware attack happens or occurs against a business every 14 seconds in today's climate. So from an overall standpoint, it's extremely concerning, but as we transition into looking at the micro viewpoint and specifically home care, we feel we can paint a clearer pictures as to what the overall loss could be for an individual business or a business that is operating in today's climate, especially from the home care perspective. So as we look at this next slide, this has a lot of information in here, and we'll kind of run through it, but it really does help evaluate what the potential loss could be for an individual business. The first example you see in there is, and I should note and preface that these are pulled from a handful of the leading cyber insurance carriers that we work with, and they are willing to report certain losses, obviously with certain confidentiality behind who the client actually was. But to help paint a picture, this is the information we were able to obtain from them to put this together for you in today's presentation. That first one is noted is a home care that was domiciled in Indiana. They suffered a ransomware attack, like I was mentioning before. Ransomware is also referred to as cyber extortion. To give you a brief explanation of that, it's ultimately in the form of a malicious actor or third party that breaches your system and either locks you out of your system or locks you out of your data in order to utilize it. And they can do that across multiple systems or singular systems. And with that, they usually hold it in ransom or for ransom for a specific demand of money. A lot of times it's in the form of cryptocurrency, such as Bitcoin. And in this case, you'll see there that this firm actually was locked out of their system, was held for ransom, and ultimately were being required to pay 50 Bitcoin. That translates to roughly $12,000, as you'll note there. And they actually fought and did not want to pay that because they viewed as not weeding out this malicious actor as a way for them to perpetually be attacked afterwards, in the aftermath of the first attack. So their approach was to ultimately hire a forensic IT specialist to come in and evaluate exactly what happened, how it happened, and weed out this malicious actor. In the process, hopefully their data was going to be restored, and the cost incurred to do so obviously would amount, and then ultimately the potential reputational damage, because anyone that did have their information breached, they would have to notify. The overall loss here, as you can see, it was not the $12,000 that was being demanded, but it ultimately resulted in $43,000 in total costs. So this insured, and this example is a bit different than the other two you see below, in that they didn't have insurance. So all of this was actually paid out of pocket, unfortunately, in that very tense and stressed situation of not being able to operate within systems or utilizing systems and devices that they normally do. The second one here is a completely different type of cyber loss, but it's a very, very common one. I would put this up as within the top two of ransomware cyber crime. And this one occurred in California. The difference than the first for this one is that they did have insurance in place. So they were ultimately breached, their systems were breached, and the third-party malicious actor compromised their bank or financial institution credentials and started wiring money out unbeknownst to the actual insured and their principals. The bank thought they were communicating with the actual insured because they were operating within the credentials that were normally provided and operated by the insured, and so they were willingly approving the transfers. There was not any risk management features in place to catch that in time, so the money was lost, and the bank was ultimately out of it because this insured did have an insurance policy in place with cybercrime coverage. So the result for the insured's perspective or the business itself was simply paying their deductible. The third one here is Colorado. It says et al. Because this was a much larger firm and home care agency across multiple states and various companies within the overall group of companies. And they actually suffered a privacy breach, which is completely unrelated to the first two types of cyber loss that we talked about. This one was different. in that the overall scope of it was much larger of breached records. As you'll note, 10,000 individual records that were collected and maintained from past years' work with clients. It also included past and current employee information. So the numbers that ultimately transpired is really what we're factoring in on the average of what we see. You can see that we roughly estimate, because the insurance carrier was not able to provide the exact numbers on this one because it is public knowledge, was $180,000 in total costs. And we kind of break that down further to help explain how do you come to that number. And the first one here is forensic costs. That is always the leading factor behind the overall costs incurred for a cyber claim, regardless of the type of cyber claim, if it's ransomware, cybercrime, or a breach itself. On average, those can range from $40,000 to $60,000. Reason being is that these forensic IT specialists are very specialized and they charge astronomical amounts per hour for their work. So the costs can quickly skyrocket when accessing them. And more often than not, if you don't have an insurance policy in place that provides this coverage, it's a tense situation. You're typically, as a business, scrambling to get someone to help assist and get you back up and running, so to speak. And their rates can be skewed to their advantage, to put it politely. But taking it a step further, you can look at additional costs that are incurred in just handling a privacy breach type claim, the notification costs to actually notify potentially affected individuals. I would note that that is a hot topic just because every state now has different notification laws, meaning you have different time requirements to report potential claims, and there have to be certain wording and notification clauses that are released to individuals that are potentially breached or had their information breached. So this is important because most home care and most businesses today don't have a privacy attorney on staff and don't know how to navigate those various waters in adhering to various state notification law or other federal law as well as it relates to privacy. The credit monitoring actually is now being lumped into notification costs from what we're seeing. More and more states, attorney generals are requiring that credit monitoring needs to be provided after a breach to potentially affected individuals by that, and the overall cost you can see per record amounts to 10. So while this specific example helps break down the pricing, we wanted to include that in there. There's a couple takeaways in that it's a large one for 10,000 individual records, but you could translate that to a 500 record breach and the costs would be astronomical in their own right. That would change the notification cost to a $2,000 loss and the credit monitoring cost to a $5,000, totaling $7,000. And that's not even factoring the forensic costs that would ensue. So it's alarming at how quickly these costs can quickly add up. Fortunately, as we'll talk about later, there are some risk management tools and approaches you can take to avoid these and ultimately approach it as a reactionary standpoint as well and provide a safeguard and a backstop through a insurance policy itself for cyber. So as we dive in and explore various cyber losses, it's a broad definition with various subsections and various types of ways that a business in today's climate could suffer a loss itself. Here is just a list of the core types of cyber losses, the most common ones that we see today and are being reported today. And we'll kind of quickly run through these. The unintended disclosure is a breach, a privacy breach of data, sensitive information. That can happen whether through a third-party malicious actor, as we talked about previously, or it can also occur just through the mishandling it. If you have an employee that mistakenly sent the email off with all client information to the wrong intended party, that ultimately can be a breach if it's not reconciled appropriately. So just to clarify that it could be first-party error or third-party threat. The second one here is hacking and malware. It's the common one that most people think about when it comes to cyber losses. It's that third-party threat, electronic entry to your systems as a business, and they could include malware or spyware within your overall system, whether you realize it's residing on your system or not. Payment card fraud is more specific to those types of businesses that collect payment cards and process debit, credit card transactions for clients. Not very prevalent for the home care, but it is a common cyber loss that we're seeing. And an insider one is the following. So we most often refer this one as a rogue employee. It's someone with legitimate access and responsibility to operate within systems or with sensitive information, and they utilize it outside of their responsibility, which ultimately leads to a breach or a security or system failure itself. Moving on, you'll see the physical loss in there for non-electronic records. We wanted to include that just to emphasize that a breach of information doesn't have to be digital. It can absolutely be actual paper records themselves if they're not disposed of appropriately. And then there's portable devices. Portable devices, I can tell you, are one of the biggest concerns from an overall cyber risk landscape, just because they provide access to various pieces of information or other systems. If they don't have proper risk management features in place, that can easily be lost and fall into the wrong hands, so to speak. So it's just a greater vulnerability that's harder to control, in other words. The last two here we briefly talked about in the previous slide, but wanted to emphasize them because they are the top two concerns to home care based on the claims and losses that we are seeing. The ransomware extortion, as we talked about, and then the cybercrime, which is inclusive of social engineering. So just to touch on the cybercrime, social engineering, to paint a clear picture on that front, as we noted previously, cybercrime can occur when a malicious third party breaches the system, compromises financial institution credentials, and begins wiring money out of the company's bank account. The basis of that is that there was a breach and information was, or the credentials were compromised. Social engineering is slightly different, but is just as relevant in that there is no breach whatsoever. This is the scenario that I'm sure we've all heard of one way or another, where a malicious third party has created an online presence to purport to be someone within the organization with authority from an accounting standpoint, and they are directing someone else within the organization or company to transfer money out to another account. So it more often than not comes in the form of an email that looks like it's from an owner or principal or a CFO of a larger company, and they're communicating with someone, say for example, an office manager or someone within the accounting team, to direct money out on their behalf. And the issue there is that those scenarios, the insured is willingly parting of money at their own right, so banks rarely will re-implement or reinstitute the funds back into the account because the insured willingly did it. So the rhetorical question here brings it all together is, do home care providers have cyber prevention policies or business continuity plans to prevent or handle any of this? The important aspect to that there is that cyber claims are very different than other types of claims because time is of the essence. The immediate response you can implement can mitigate the overall loss on the back end and the severity of that loss on the back end. So being prepared and being fully aware of the different types of losses that face a business, that a business could potentially encounter, helps mitigate that when these unfortunate occurrences do unfold. So as we dive in a little further into types of cyber breach and loss, we want to look at the causes. How does it lead to these types of losses that we just explored? And for those visual learners, such as myself, this chart paints a very clear picture from what we're seeing, and it actually helps overcome a misconception that is out there from the insured or company side for those business owners that are evaluating cyber insurance policies or cyber risk as a whole. What you'll note here is that it's almost a 50-50 split, if you will, between what I keep referring to as a third-party threat and a first-party error or issue. And you can look at this and just noting the lost stolen device laptop at 10%, rogue employee, staff mistake, and paper records. You add those up and you're over the 40% mark. All of those are first-party type losses as we define them, where there was no third-party threat. It was a first-party action that led to a breach or loss. So just in the course of operating your business, you have nearly 50% exposure to suffer a cyber loss without any third party maliciously approaching your systems or your data or your financial institutions. So it's a big takeaway because we often run into a lot of companies that are looking at cyber and they're constantly thinking or focusing in on the third party threat only. And this helps overcome that, or at least show that there's more to it, to the bigger picture. So as we move on here and looking at the cyber loss, what's the ultimate loss to a home care provider when these unfortunate occurrences do occur. And looking at various loss ratios within insurance carriers, we were able to draft these percentages up that 100% of the time when there is a cyber event, you experience costs to investigate and potentially repair and replace systems. This is important because if you have a suspected incident where your systems aren't operating to the degree that they normally do, or you think something may have been breached, it doesn't have to be proven. The investigation itself from a forensic IT standpoint, as I mentioned before in the previous slides, is going to incur costs. And approaching those specialty firms, those forensic firms, can be extremely costly, as we noted. So that alone is the biggest concern. From there, you can see 74% that ultimately do report a loss, also report a loss of customers and clients. It's a reputational damage byproduct. And then there's litigation for potential lawsuits at 59%. And then the regulatory bodies can come in as it relates to HIPAA, high-tech, and other state privacy laws that we were referencing before. That's a sizable exposure as well from a privacy standpoint. Furthermore, there's downsizing for the larger breaches because companies who have to pay out of pocket to handle these incidents don't have the capital to pay funds for, or not so much funds, but salaries for their staff. And it's a devastating blow to brand reputation, as we noted. So some more stats in here just to paint the picture a bit more clear is that another cybersecurity study by Mandiant was 69% of the incidents that investigated the company that was breached learned from the incident from a third party. We thought that was relevant just to point out that more often than not, when there is a breach, it's not even the business itself that suffered the breach to realize it. It's a third party that has to disclose that to them. It's just a case in point. You could have all the right systems in place and these breaches occur without your knowledge, at least for the initial period of time. And then finally, 60% of small organizations that experience a breach close their doors within a year of suffering a cyber attack, just given how costly they can be to navigate these. So moving on, specifically looking at home care, there's some misconceptions that we like to address as well. And these next couple slides kind of run through that. The first one is I'm not a target for hackers, whether that's based on your belief of a class of business within the home care space or your overall size of your company. From what we're seeing on the claim statistics side, that's just not the case, unfortunately. And the reason being are these various points that you do have lower barriers due to less security. You don't have the capital to dedicate to, say, for example, like a Fortune 500 company. And so it's almost the path of least resistance for these third-party threats. Larger companies obviously have the more capital to address the IT issues and build out the infrastructure and dedicate personnel like the CTO, CIO, or CSO positions. And the larger companies have more capital to dedicate to encryption. It's extremely costly from a monetary and efficiency standpoint. So for small business or sole proprietor business type, it can be almost a well that doesn't dry up from the hacker or third-party threat standpoint because they can breach you without your knowledge and repeat targeting to constantly funnel money out without your knowledge or just breach your system and utilize the information or hold it for ransom on a repeat offense. So another statistic thrown in there is from another security Symantec survey indicate 40% of all targeted cyber attacks are actually aimed at organizations or companies with under 50 employees, just to emphasize those points further. So another misconception is home cares don't have data worth stealing, and that's not the case from what we're seeing. Again, the big ticket items, if you want to look at what type of data that they're looking for or can be compromised, is personally identifiable information. That's the PII listing that you see there, but also it's the personal health information as well, the PHI and credit cards. From there, there's also ancillary type information or documents that they would look for or could be breached, again, from just a first party loss or error. And that's organization plans, company financials, revenue sources, contracts from third parties or partners, vendors, list of employees, volunteers, any login credentials associated to them for systems that you do have and the employees interact with. And a lot of times we see that small companies are utilized by these malicious actors just as a way to breach a larger system. So moving on from there, needless to say that if you don't have anything they want, they know that you want your data, so you can resort back to the ransomware extortion threats that we were alluding to and discussing in the previous slides. And then finally, of course, as it relates to cybercrime, the financial institution info, your access to your own bank accounts, etc. So another misconception that we run into, and this is one of the more prevalent ones, and it's understandable, are those that actually outsource a portion of their data storage or overall network and security through utilizing a third party, say, for example, through Socius Technologies and the Rosemark app and platform, who I know through my conversations with Sam and Linda have extensive dedication and resources to security of such information. But there are some takeaways here that outsourcing data storage or application functions does not avoid or fully eliminate a business from the privacy standpoint and privacy exposure. And what we emphasize there is that state privacy and certain federal privacy law dictate that as the business owner who collects such data, they are listed as the data owner and therefore responsible for regulatory definitions and requirements. So regardless of how you handle your employee data or customer data on a storage situation or utilizing another platform or application, you would ultimately be responsible for notification to individuals that were breached at day's end, which, as we noted before, can incur some significant costs. But going back to the first point as well, and we talked about forensics repeatedly, but it is one of the driving factors and costs behind these types of cyber losses is the forensics aspect. Just to figure out if you have a breach through the forensic analysis, it can incur costs, even if you don't think your data, or don't store data rather, on your exact system. They'll want to evaluate if systems or data was breached through your system initially, the access point. And then moving on from there, there's some other handful here, the cost associated with data restoration. If you ever had data that was corrupted and need to be restored, network interruption is becoming a hot topic. It's not as relevant for home care, just based on the nuances in home care and how home care services are rendered and not being fully dependent upon overall networks themselves on the day-to-day, or at least entirely throughout the day. But network interruption is a loss if you can't access certain data or systems if it is prolonged over a certain period of time. And then the liability to third parties, that's the suits we discussed early on, that if you actually don't have data but you're operating within a system and one of your clients, for example, or I'm sorry, customer or employees mistakenly clicked the link and it spread a virus to other systems, you could suffer a lawsuit for spreading such virus. That would trigger a liability component of insurance policy, or would have to be handled on your own and getting legal counsel to defend against. The other portions here, we talked about the reputational harm of actually having a suspected breach, or the extortion, that ransomware, cybercrime, social engineering. So with
Ryan,
all that, yep.
This is Linda. We have a question from one of our customer listeners asking, what are the average damages from unintended disclosure? Do you have a sense of that?
That's a good question. We don't have any statistics on our end for that. I can tell you that unintended disclosure, which usually does not involve these malicious third parties or actors that we're talking about, it's not one of the driving or overall largest costs that you see. They can be managed appropriately in the overall notification aspect of it. And cyber attorneys and privacy attorneys are very specialized in navigating those difficult situations and doing that as efficiently as possible. What we see as the issue in that is the subsequent reputational damage. And I think that's where the biggest loss is attributed to in those unintended disclosure situations, that you actually have companies or clients that lose faith in doing business with you as a result of potential mishandling of their sensitive information. So I fortunately don't have any statistics. It's a great question, and I wouldn't say that it's a driving concern in the overall severity of loss like some other types of cyber losses can be, but the reputational damage is absolutely the biggest concern associated to those incidents.
Thank you.
Absolutely. Thanks for the question. Keep them coming. So as we dive into the next slide here, the cyber self-assessment and strategy, it's not to be all-encompassing or comprehensive. There are very detailed cyber risk assessments that you can engage in, which we can talk about a bit later, actually. But this is a good starting point to start asking the right questions and to start understanding what your overall cyber risk footprint is. So breaking it down into an easy 1, 2, 3 step, the first step would be understanding your cyber risks and responsibilities. So from a privacy, network security, and even media standpoint, how do you handle such information is the first question as it resorts to privacy and the data that you have that is sensitive. Is it individual based? Is it organizational based? Do you have contracts with third parties and sensitive information via those contracts? Or is it strictly, like on the home care side, individual client information, social security numbers, date of birth, etc.? And then from there, with that sensitive information, are you storing that yourself, as we talked about before, or are you outsourcing storage to a cloud provider or another platform provider? And in the transferring of such data, is that secure? What are the risk management protocols and security systems that you have in place during transfer, not just of storing the data itself? And then finally, the regulatory requirements. If you're handling the PHI type information, personal health information that we talked about in a previous slide, there are very stringent, as we all know, very stringent protocols and procedures you have to take to maintain security of that, because there are specific governmental bodies that maintain oversight for health information. Separately from there, as you look at the overall network security component, what third parties have access to your data or network itself? And as we noted before, from a network standpoint, not so much the data and the privacy, are you outsourcing certain activities, and in doing so, are third parties garnering access to your systems, or is there an exchange between systems of your system and a third-party system? And then finally, within these agreements that you may have with other vendors from a data storage or application provider, what contractual commitments have you made? What's the indemnification clause within those commitments? I can tell you, just to give an example, it's outside of the home care space, but it's very common for retail type enterprises that have merchant services agreements for payment processing, because they're constantly accepting payment cards at restaurants and hotels, etc. They more often than not utilize an outside payment processor, and the contracts that they engage in, more often than not, if they're not negotiated to the business's favor, they have what we call reverse indemnification, which means that if there's any breach of information, the liability will reside with the merchant, the business owner, and not the payment processor. So it's very important to review any contractual commitments as it relates to privacy, security, and looking specifically at the indemnification clause. And from there, do you have a legal review that's actually looking at those types of contracts? And media content we throw in there as a cyber loss, given the expanse of advertising and media sharing on various platforms, whether it be a website, it could be social media, LinkedIn, other social platforms, etc. All of which could ultimately resort in a third party alleging liable slander suits, copyright infringement if there's logo issues, etc. So step one, understanding cyber risks and responsibilities is a good starting point, knowing your footprint. Step two, what do you do with that? How do you implement security? What policies, plans, and strategies can be enacted to help protect you in the best way possible from the company, from the top-down standpoint of the company? So these are just a few snippets. There's a lot more. If you talk to a cybersecurity firm, they are very detailed in their recommendations, but these are the biggest takeaways and the common ones that we constantly hear. First one is update IT systems, strict adherence to software updates to protect network. The WannaCry ransomware attack that occurred 2 years ago was actually a vulnerability found in the Microsoft operating systems. And those that did not update their software in appropriate timelines were the ones that were susceptible to the attack. Those that did update and patch their systems through the prompt that Microsoft sent to all their users did not suffer from it. So it was just a matter of updating your software or accepting your software updates, which I know we all get far too often on our phones, from the iPhones to your computers if you have Microsoft on your overall desktop. And doing those immediately helps, because the big companies know what the bad actors are up to, needless to say, and they're trying to patch their systems and protect their users from it. Separate from that, there's the protect sensitive information. Are you engaging in encryption? That's one of the best ways to protect sensitive information. It can be costly, and more often than not, if you're outsourcing that function as a small business or medium-sized business, your cloud providers are encrypting the information. But if you're residing that internally, encryption would be left to you. Server segregation is another key element to engage in for privacy protection, and then also personnel segregation to ensure that not every employee within the overall workforce has access to every piece of information that's confidential or pertinent to the company as a whole. Additionally, education. We recently got a study from one of the top cyber insurance carriers. They did a 2-year-long internal review of the types of losses that they were handling, and also went out and pooled various companies across multiple industry segments. And what they learned is that 60% of the overall losses that they sustained and pooled were due to employee lack of education and clicking suspicious links and not recognizing that this is a threat or a fraudulent email or a fraudulent actor, or mishandling information without a third-party threat, just not destroying of confidential paper records, for example. So it's a pretty eye-opening statistic when reviewing that report, that over 50%, at 60%, nearly 2/3 of all claims were associated to a human error or human issue, just that can be addressed through training. From there, you want to develop plans. We talked about this in a previous slide. A privacy policy in place is a good starting point. It's not the end-all be-all. A business continuity plan, which is the listing you see next, is a guideline as to how you handle certain cyber losses, like the various ones we reviewed before. And do you have a bring your own device to work? Are you asking your employees to utilize their own device in accessing pertinent information or confidential information? Not 100% of the time, but if you are at any given time, that's a pretty sizable vulnerability, because it's something you can't control to the degree that you would like with other systems. So developing plans is vital for the various avenues or situations that breaches can occur. And then, as we mentioned before, reviewing contractual commitments, obligations involving your privacy and network security itself, and if you can, through legal counsel who have specialty in such. So then the third step here is...
Ryan, I have one question. Move on. So that is, any idea what the monetary investment would be by, say, a home care agency to make sure their security is at a high level as it possibly could be? Any ideas about that?
That's good. Like it's a very good
that
question.
Last bit of information that you gave had a lot of things that people could do. I just wondered.
Yeah. So going back to that slide, just for reference, it's a very good question. Your thought process is spot on in the flow of this presentation, because ultimately where we end up is all these items that you see on this page, you can do on your own. And to your point, Linda, it can be labor intensive and extremely costly. What has transpired on the insurance side for cyber risk and cyber insurance policies and the true cyber specialty insurance carriers out there, they are actually willing to provide a lot of this to you. And it's through risk management offerings that they have on the front end. At day's end, their standpoint is they want to make you a better risk to them on the front end, because it'll help mitigate their overall loss on the back end. So what we'll actually talk about in the very last slide is a slew of offerings that you could get through an insurance carrier, which are free of charge, versus, to your point, Linda, looking at this list and trying to go talk to a privacy attorney or a forensic IT security firm and helping develop plans and evaluate your network, et cetera. So it's one that we recommend just knowing the cost-benefit analysis to do out of pocket and through an insurance carrier. It's pretty clear that if you're partnered with the right insurance carrier and you utilize their offerings to the max degree that you can, you will reap the rewards through and through, and ultimately avoiding loss, hopefully, but also all the risk management and proactive efforts that you implement on the front end as well.
Great, thanks.
So looking at the final slide here is, as you engage in this overall cyber risk endeavor in understanding your risk, evaluating your risk, and then implementing various risk management features on the front end to avoid the risk, insurance should absolutely be a factor in this, and from our perspective. And it plays into what we're just talking about, and that they're willing to commit to you on the front end and risk management efforts and evaluating contracts, et cetera. But they're also there on the back end to handle the situations where you actually need them, where there's a potential claim on the line. Because as we noted in the previous slides, trying to do that on your own without dedicated contacts or resources such as go-to forensic IT specialist or an on-call privacy attorney, it's daunting, it's tense and stressful in those situations, and you're in a bit of a scramble mode, and it can be extremely costly. So in evaluating a cyber carrier, if you choose to implement that aspect into your overall cyber risk initiatives, here are some questions that you should be looking at, or some key points. Is understanding exactly your where your cyber insurance can fit into your privacy security strategies. Ensure the cyber policies are structured to address your largest exposures, because there are a multitude of coverages found in current cyber policies out there, and they can all fluctuate in their own right as to how much coverage is offered on one insuring clause versus the other to address one cyber risk or cyber exposure versus the other. And then also evaluate the carrier on claims handling. As we noted in a previous slide, cyber claims are very unique in that time is of the essence, and how they're handled in those early hours, first day, can mitigate the overall loss from a severity and frequency standpoint. So a carrier with superior claims activity that has been proven and vetted as a cyber specialty firm can reap significant benefits for an insurance buyer and company that's evaluating overall insurance policies. And then evaluate the risk management offerings that we were just talking about, Linda, to your question. What are they offering you on the front end, so to speak? Not when a claim occurs, but on the front end to protect you for the future potential of a claim. And utilizing that risk management offering once you realize what your carrier is offering. So based on step 1 and 2 that we looked at, what are your needs from coverage, from claims, from risk management? It's the best way to approach the evaluation of your cyber insurance policy review. So as we talk about the insurance protection and kind of bringing this full close, this whole presentation together, I just wanted to paint a clear picture as to what the insurance products today look like for cyber, because as with technology being a constantly evolving space and endeavor, and businesses incorporating technology and having to evolve to that, the exposures obviously are evolving as well. So as a responsive nature and effort to that, insurance policies are evolving on a monthly basis from our standpoint, from what we're seeing. Carriers are restructuring their forms to address new exposures and new types of threats, and restructuring wording to be more broad to the buyer themselves. I can tell you as a whole, the cyber insurance marketplace is what we deem as a soft market, in that you have a huge capacity of insurance carriers all trying to get into this new wave and new product of insurance. Although it's not technically new, it's been around for over a decade. It's in its current form, it's very new. These policies in their current form with the coverage they offer today are industry leading, cutting edge, very different from what you saw 2 years ago, 3 years ago, 5 years ago. So needless to say, it's a benefit of the buyer in a soft market. You have this arms race amongst carriers that are trying to enhance and offer new coverages and risk management features, and they're doing so at very discounted rates because they're all trying to outperform their competition. So with that, you can see on the next slide here just what underwriters look at. I wanted to provide a quick snapshot to help give a basis as you approach cyber insurance, if that's what you choose to incorporate into your cyber risk initiative and endeavors. This is how the underwriters initially review or approach any company's submission for cyber insurance. Revenue is primarily the top rating basis for them. They look at types of operations and services, obviously specific to home care in this conversation, and then types of records handled. Is it private duty? Is it true home health? In that you have access to higher end PHI information, or is it more PII information such as date of birth and more generic personally identifiable information? What's the overall number of records, individual records that are being handled by you? As we noted before, are you outsourcing that or are you handling the storage of such records on your own server or network? Credit card, debit card processing, security measures that you have in place, encryption, segregation, and contractual relationships. These are all areas that the cyber underwriters will approach in evaluating a risk and offering a quote. I can tell you that majority of cyber applications actually will have various questions specific to these. So it's pretty commonplace. You don't have to go collecting this information to pitch yourself to a carrier. If you have a cyber application, an appropriate one, it'll address all these points up front.
Ryan, this is Tammy from Heffernan. Can you just touch on what we're seeing in the industry is a lot of carriers are offering cyber coverage as kind of like a throw-in or a sub-limit versus getting a separate cyber policy. I think to help these agencies understand the difference would be
absolutely
for them to understand what they're getting, buying at a, that capacity versus a true cyber policy.
Absolutely, it's a great point. It's a common evaluation that we implore any potential cyber risk buyer to evaluate. Ultimately, what Tammy is referring to is that you can have your home care package policy, which has your professional and general and your sexual abuse misconduct and your hired and unknown coverage all packaged together. And a lot of those carriers that specialize in the home care packages can offer a form of cyber. It's more often than not sub-limited, meaning they're not offering it at the full limit of your professional liability or general liability policy. They're doing it at a $100,000 sub-limit or a $250,000 sub-limit. And so in its own right, or innately, it's not going to be the equivalent of a true standalone cyber policy that we're talking about here. And it's actually perfect timing, Tammy, because this current slide that we're looking at, which is the insurance coverage overview, if you have what we call attachment cyber, where cyber coverage is being attached to another line of coverage, it does not include all of these coverage listings. All of these coverage listings that you see here are specific to a standalone cyber policy. Also, when you have this attachment cyber to other products or other insurance policies, they don't offer all the risk management features that we talked about before. So if you're looking just to get some limited protection and not go entirely bare, as we like to say, on the exposure and self-insure that to its entirety, we obviously recommend getting some level of insurance. If it's a 100K sublimit attached to your home care policy, it's better than nothing. But if you're really looking for true protection and true risk management services and superior claims handling, then a standalone cyber policy is recommended. And to take it a step further, I can tell you that, tying it back to the previous conversation about us being in a soft market for cyber risk, the policies are very inexpensive. You could buy $1 million policy. We're seeing starting minimum premiums of $500 and going upwards to $1,500, depending on how much coverage you want to buy and how much enhancements you want to build in. So the attachments we see to other lines often charge a couple $100 in their own right, and they're just not as comprehensive as a standalone policy. So when in doubt, we always recommend the standalone policy to Tammy's question. That's a good point. Thank you, Tammy. So the last couple slides here, again, this is just a coverage overview for what you can find in insurance policy, breach coach services, that's the on-call person that you have at your disposal if and when you think there's an issue or know that there's been an issue. Network security and privacy liability, that's a defense counsel that you would have at your disposal. The forensic expenses that we talked about before, that's included into these policies. You don't have to go pay out of pocket or find your own firm in the event that some issue or claim does arise. Breach notification costs, as we talked about with the various states and all the different state requirements having their own notification requirements. You have a privacy attorney that will help take you through all of the breach notification costs and endeavors, including the letters, call center for people that are affected, and then credit monitoring and a PR firm to help you with your overall reputational harm after. Hacker damage is the cost to restore data. As you can see, the regulatory investigations are pretty self-explanatory. The cyber extortion ransomware, you get coverage for that. They actually have professionals on call that can help navigate those ransomware attacks rather than you having to field it on your own and negotiate on your own. And then the cybercrime coverages can be built in to avoid loss of money when your money's being wired from the financial institution in a fraudulent manner. Also, the last few here, business interruption, if you ever have that downtime and loss of revenue or loss of contract associated to it, there's some business interruption you can get in policies. And the media liability that we talked about for advertising online and libel slander type suits and copyright suits if you have those. And then finally, the reputational damage. Some carriers, not every carrier, offers this coverage. This is offered if, in fact, an insured suffers a cyber type of event and they lose business from it, and they can report it to the carrier. The carrier will help rectify the overall loss of revenue associated to the event and the lost clientele or lost customers. So then the final slide here, just to bring it home, is that risk management feature that we recommend every potential buyer or someone exploring cyber insurance look into. To Linda's original point, every insurance carrier really offers their own variety of these risk management features. So it's incumbent to evaluate what the given insurance carrier you're maybe looking to partner with actually offers. Some offer a cyber risk management portal where you log in and it's kind of an a la carte menu. You get to decide if you want assistance in contract review, if you want to talk to a privacy attorney. It's this whole portal that you can operate in and pick to your leisure and your discretion as to what you want to focus on. There's pre-claim legal advice, again, if you want to talk to an attorney. They help develop business continuity plans, response development, so you have a game plan, so to speak, when these issues arise. And they can provide cybercrime risk management best practices, how to avoid those social engineering cybercrime losses that are constantly growing today. Some even take a step further. They have a platform where they can provide credential and email monitoring and let you know if any of your employees' emails have already been breached or susceptible to breach. And they can also implement some software on the front end for threat mitigation, like the ransomware attacks, because they know what the bad actors' codes and ransomware threats are. They can put up some defensive measures to weed out the ones that are already known. So in whole, it's a very big endeavor to take. Hopefully this provided some insights as to the various steps and questions you can be asking yourself as a home care provider and business owner or operator. And there are specialists on call to help navigate these waters and evaluating the various risk management features you can implement and the questions you should be asking yourself. And ultimately, if you choose to explore insurance, to be a part of that endeavor. And I want to thank everyone for their time.
Ryan, thank you so much. We're coming up on an hour now, so I don't see any new questions, and your presentation was very comprehensive. So I hope people will reach out to you, and you know, with any questions they might have, they can also contact us, and we will do our best to send them in the right direction there. So thank you so much for your information, and we really appreciate your time and effort here.
Absolutely, my pleasure. Thank you for having me.
Thank you, everyone, for joining today.
Thank you all, Rosemark customers, for attending. We appreciate your concerns. Take care. Bye-bye.
Bye.